Good afternoon, traders, and welcome to this week's Forex and market wrap. So it's Joseph here from Eightcap, and we've had a pretty interesting week so far. It's been an enjoyable week, and we've had plenty of surprises and plenty of movements in the markets. We'll get to crypto later, but we've finally seen some movement in crypto, which has been, you might say, refreshing or surprising, or just basically good, just to finally see something happening in some of those top 10 currencies and coins. So yeah, it's been quite enjoyable. We'll get to them in a bit, but we'll start with the US dollar. So we'll just retrack back to Tuesday. We saw 2 days of very heavy selling. It sort of came in line with the consolidation lower high that we saw set up last week. Obviously it's no sure thing, but it made sense to follow that script. Risk currencies saw a fair bit of movement. So the Aussie, for instance, very strong moves higher. We've seen it's nearly a break of that trend here. The euro as well. We saw some beautiful moves this week. It stopped yesterday with a fight back from the US dollar, and we'll get to that shortly. But the pound as well, some nice moves, and it continued as well to the yen this week, so it wasn't as decisive as we saw from currencies to the US dollar, but we still saw some pretty fair solid moves to the yen before yesterday. Now, we didn't hear any intervention or anything like that. It was more of a risk off yesterday as safe havens came back. The dollar hasn't, as I've said, the dollar's been having a pretty rough time this week, and it's continuing to trade lower against the yen today. So the moves haven't been enormous, but there's still a fair move down, and we'll look with the US dollar Japanese yen to see what happens if prices do retest 145, if that level of previous resistance comes in as support. So things are really kicked off with the Chinese GDP. We saw a very strong figure released, surprised me. So it was above expectations. It came in at 3.9%. The timing is interesting. It was meant to come out last week, but look, it's no total shock that this GDP figure was released after the Chinese government finished their cabinet reshuffle, and President Xi was elected back into power for a third term, I believe, which is a record for a Chinese leader. I think, or maybe it could be in line with Chairman Mao. So Xi definitely looks like he's there for the long stretch. So he reshuffled his cabinet. There's a few new faces coming in. There's still talk about what they will or will not do for the real estate sector in the country, and that's still a concern there. But even with all the lockdowns and everything that's been going on in China recently, we still saw 3.9% the quarter on the year. So quite an impressive result, and a strong figure as well. So services in Europe continue to trade pretty mixed. The European data came out mixed, and the French data came in mixed, and the German data came in flat to lower. The UK services slipped to another low not seen for a few years, with misses in both manufacturing and in services, and the US came in lower as well. So that sort of held the dollar in demand on Monday, but into Tuesday we saw some pretty strong moves forward, even though consumer confidence in the US came in weaker on Wednesday. Australian inflation is running at its hottest pace since the 90s. It came in at 1.8%, and the Canadian Central Bank raised rates, but not to what was expected, 4%. They raised them to 3.75%, and we saw the ECB raise rates expected to 2% overnight, and things still look pretty grim in the EU, and there's still a lot of pressure from energy prices, which is putting up the cost of food and transport. So it continues to, inflation continues to be a key issue in the EU. But regardless of all these issues, we saw that really nice 2-day rally this week, and it wasn't just on risk currencies. It was a real broad move, and it was on stocks, currencies, and over cryptocurrencies as well. We can see here with this rally on the US 30 at the moment. We're going to touch on the Nasdaq. The Nasdaq faltered last night. We did see some gains on the US 30, but tech earnings have been a bit of a disappointment. So one of the other guiding one of the other guidances that have been driving some of the risk markets have been US earnings as well. So they have been overshadowing some of the consistent worries from inflation rates and hawkish Fed. So there were some very positive earnings coming out, but Meta came out with a very disappointing earnings, and I think it was around 20% that the was wiped off the stock price, and it's also trading at levels not seen since 2016. So it's totally written back all of the COVID lockdown rally over 2020 and 21. So I believe that's been taken off as well. And if we look at the Nasdaq now, we can see yesterday's sharp move lower, which was driven really by tech stocks, and a lot of that was down to missing earnings. So two different stories, aren't they, really? When you look at the Index 100 and the US 30, we can see two different, very different pictures of strong demand, and then a lot of indecision and faltering due to a bit of worry what's going on, continuing to go on in the tech sector. But we will have to see if sellers can break through this point. They tried last night and failed, so we'll be looking at that 11,000 area as support for the time being. Now, we do see a close through there. We'll be looking to see if price could get down to that 10,600 area, and then the next point then is the low we saw back on in October, when we had that real strong bounce selling. Now, look, this recovery rally is looking like it's under a lot of pressure. The US 30 and the German 30 and some of the other key indexes, we'll be looking to see if we do get a push lower and if we get a higher low, and if that then does push up a new test to test the high. If we do see a new higher, we'll be looking for this this upswing here to turn into a short-term trend. You could call it a short-term trend now. We have a few continuations already, so it will be interesting to see after the next retracement if we do see a continuation and this trend does continue. The Nasdaq is definitely lagging, but the S&P 500 is looking slightly better, but due to its tech component, it has seen a bit of pressure as well. So we will need to see if, like I've just said with the other two indexes, if we can see a new higher high to show that this trend is going to continue. So, and if buyers are continuing to hold control after breaking out of this, this range area here. So oil was another big winner this week. It is slightly lower at the moment, but we saw a very strong session at midweek, and that was after the inventories, and it was a very nice strong move. It was over 4%, and what we now want to see now is, like with the stock indexes, if it can continue, and if we can get a continuation through this resistance here. That is the short-term resistance at 89.88, and if we do get a new move up to test that 93.50 area, anywhere above there, and we could be starting to talk about this as becoming a new trend as well. There's still consolidation here. We do need to see a break of this short-term resistance just mentioned, and then a new move up to, and possibly hope to see a break of that level to sort of show buyers are in control. Now, the higher oil goes is a bit of a double-edged sword at the moment, because that does then put pressure back on economies and inflationary worries. So I don't know if, especially the US government, if they're going to allow oil to get too high. President Biden has spoken openly about releasing more of the emergency stockpile of crude to keep the oil price under control. And he made comments about this as well after the OPEC announced that they would look at cutting production. So we do see there'll be a lot of pressure, potentially a lot of pressure on oil if it does start to advance quite quickly. So there could be some points of interest right there just for oil, and if it can actually continue the rally. Now, gold was another one that saw some nice movements this week with the dollar trimming down. The gains weren't that fantastic, but we have seen a test here of that 1672.50 area. It's still stuck in some consolidation. We really need to see a break at that level to signify and show that buyers are in control, and we're looking for a higher move. It looks a lot like oil at the moment, to be honest with you. That's the next key target if buyers can continue that 1727 area, and I think it will need the dollar to play ball. Other geopolitical pressures are sort of not stabilized, but they're definitely not having the influence they once were. If we just look back at the chart here, we can see that swing up when we had the tensions when the invasion of Ukraine occurred, and then we can see that consistent fall lower now as the market continues to just factor that into what's going on, and with that higher USD. So I think gold really needs the dollar to play ball to sort of get some more momentum to try and launch a bit more of a move higher, as well with global recession worries and demand and production worries. That also hurts gold as well, as it is an industrial metal as well. Now we will just move on to cryptos and then we'll wrap it up. I don't want to be too long today, but we will just start with some of the main indexes. We'll start with the Crypto 25 index. So we can see what we're talking about here. We had this really strong session here. We're still trading high today, but we want to see a break and close above this resistance at 8528. Then hopefully a move and break above 8869. It's been a really nice sign to see finally some strong direction, some strong forceful direction from buyers, and it's been something we haven't seen for a fair while. We've been in these ranges. So if we go back up to some of the top currencies, you'll see exactly what I mean there. So with Bitcoin, for instance, we've had this strong range. We've finally broken about the top of that range after 2 days of really firm buying. Price is just hanging on to that 20,000 area at the moment. Hopefully we want to see price hold at a minimum above this level at 19,714. We'll look for a new higher low, and as we've discussed with other markets, including the indexes, we're going to see a test of that high and a new higher high to signal a trend is underway. Ethereum is in exactly the same boat. There was a really beautiful move above that, that range breakout. We saw those 2 days of really strong buying. Again, what we really want to see is that pullback. We will see a nice higher low above, hopefully above this range point, and then a new rally that goes up and tests and breaks that high to signal potentially a new trend is underway. The story is quite similar for a lot of them. BNB, same story. We just want to see the higher low and then a test and break of this resistance up here at 296, and same with Solana and other cryptocurrencies looking for these same patterns, with resistance being at the 34.37, and with Ripple, we'll just touch on Ripple as well. So Ripple is down today. I'll just update that. It's down today after a push higher failed yesterday. So Ripple has now got this higher low, but we want to see a new push higher, and really a close above this high would be quite a positive sign. That 0.47 area. So we're looking to see if this indecision here can pick up some buy momentum, and that may need to be driven by overall market momentum. So one of the good things, as you would have noticed, is it wasn't just a particular couple of coins moving solidly. It was across the boards, and you can see what happened here on Dogecoin. That was just returning to the days of old, basically. A real strong 34% rally higher. So it's above that range here. There is plenty of resistance up in these areas. So again, we're just going to see that pullback, find a higher low, get back up there, test and break, just to show that buyers are pushing that trend higher. So that's it for today's update. Now coming up tonight, we do have a little bit of data to come. We have Canadian GDP, and we have core PCE price index month on month, and that's US dollar affected news. So check those out. They're coming out at 11:30 p.m. Australian Eastern Daylight Time. And thanks very much for your time today. We wish you the best for the weekend, and we wish you the best for the rest of the day if you are trading. And hopefully you've enjoyed today's update, and good trading, and bye for now.